Hello, welcome to this segment of our revision. My name is CP Aringo Frederick, and I'll be taking you through the revision of business data analytics. Remember, by now, at least we should be familiar with how this paper is always tested. And in that case, our segment today, I want us to look at the practical part. If at all you can check our revision, this block model paper, we have five main questions. The first question is all about aspect to do with this more of a FAR FM because it has a component of ratios and financial, of course, reports. Question number two, it is more to do with financial management. Question number 23, these are more to do with taxation. Question 24, this is management accounting. And question number 25, this is about auditing. So that is to say, throughout this revision, we are going to look at each and every segment in our business data analytics, and that's what we are going to do. So to start with, I want us to start with question number 21. We'll be doing them in series from 21 to up to 25. Then after this, of course, we'll also be looking at the theory part because recall, like theory is also very important in our case here. Yeah, so let us start with question number 21, which in this case you are required to answer all the questions. We told that Gen Z Limited is a mid-sized firm exploring prospects of future growth. The management of the company has prepared the statement of profit or loss for the year ended 30th June 2024 with forecast of expected growth rates in various line items for the next 3 years. This information is presented below. We are having Gen Z Limited statement of profit or loss for the year ended 30th June 2024. We are having our growth rates and we are given different scenarios in our growth rates. Okay. On that case, you are told additional information that we assume a corporation tax rate of 30%. The growth in equity is only attributable to changes in retained profits. Okay. Hint, in applying the growth rates, ignore changes in opening and closing balances. So you're supposed to ignore, of course, the changes in opening and closing balances. That is, of course, in applying what? The growth rates. Okay. Then, note 3, we're told that total equity will grow only as a result of retained profits. So the effect of our equity will always be affected as a result of what? As a result, of course, of our retained profits. We're told required prepare a spreadsheet showing the forecast statement of profit or loss for the next 3 years under each of the 3 scenarios. Compute the following metrics for evaluating performance under each scenario. So remember the concept of ratios. Mwalimu had guided us clearly on the concept of ratios. So here we are being asked of the ratios. Then part C, you are told to present a summarized dashboard with suitable graph to highlight the revenues and net profit under each scenario. Okay. So given this, where are we going to start from? Remember, we are told like we are supposed to prepare for 3 years under each scenario. So we start with worst scenario. So what you're going to do, these are the details that you're going to use, of course. So I'll take these details. We have it here, right? Remember, all these are percentage. So what I'm going to do, I'll just have them in percentage. So this is 2%, 2%, 2%, 5%, 2%, 2%. These are 10%. That is, of course, 10%. Yeah. So you're having here, this should be 10% and 5% respectively. So the data that we are supposed to effect the changes for 3 years, these are our data. So what I'm going to do, I can literally have this one here so that our details, these are the details that you're having. So remember, this is for the worst case scenario. This is for the worst case scenario. So that is what you're going to start with. How will we go about it? We need for 3 years. So we'll be talking, of course, for year one. I'll be having this is year one. That is for the year ended 2024. So you're about forecast for 3 years. So we're about 2025. Yeah. Talk about 2026. And we're having 2027. So year one, year two, year three, our forecast, right? So for worst case scenario, of course, the growth rate, these are our growth rate. These are our growth rate, annual growth rate for each component, right? So that is to say, we are going to take, of course, this value times our percentage there. That is a plus 1, yeah? So we'll be having, of course, 1 plus this growth rate. 1 plus this growth rate, yeah? 1 plus our growth rate, that is what we should be having there. So that after determining that, all I'm going to do, I'll just drag it first of all through. Then the next thing that I'll be doing, I want to lock these percentages. So I lock my percentage. We lock our percentage. Remember, locking is clicking F4. F4 is to lock, right? I know very well that my gross profit, of course, I'll be having revenue minus cost of goods sold. So this one is our revenue. I lock that part, determining our total income. We sum our other income and gross profit. Of course, I lock this part. I'm locking the column that will remain constant all through, and the column that will remain constant all through. At this point, we can clearly see that it will be our rates. So in that case, we lock all through. So earnings before interest, tax, depreciation. This case, I'll be having alt equal sign. We sum up to that point. Depreciation, amortization, I want to lock this part. So you just lock every part. Earnings before interest and tax. Earnings before interest and tax would be earnings before interest, tax, depreciation, so that we just deduct that to have that value. Earnings, these are interest expense, so we lock this. The beauty part is that Mwalimu had already guided us about how to lock. So we do alt equal sign to get the summation of that, so that we have earnings before tax. My income tax expense, we are told that assume a corporation tax rate of 30%. So therefore, with a lot of confidence, I'll be having that times 30%. So we have a value there, alt equal sign. That is what we should be having. Come talk about, of course, our profit after tax for the period. Of course, summation of that. Dividends paid. So retained profit. All I'm doing is to simply sum that up. So at this point, it will give us, of course, retained profit for the year. Our retained profit brought forward, that we are going to assume, given the fact that you're told, we ignore changes in opening and closing balance, which this is an opening balance. So that we ignore that, so that at this point, I can determine our summation to be that. Total equity. We are told that note 3, look at note 3, total equity will grow only as a result of retained profits. Yeah, only as a result of retained profits. So I'll be having that plus my retained profit, which in this case I should be talking of 123.97. That is our retained profit, right? So that as at the end of the day, these are what we should be having at that point. Our equity, of course, we should be having our equity now, which has grown as a result of that. Then finally, of course, I'm going to lock that. Okay. So the first step, of course, it will take us some time, but after that, I'll want you to observe this magic. After this, I'll want you to observe this magic. After this, I just want you to observe this magic. Yeah. So first of all, let me have it at that point. Okay. So that was for 2026, 2025, right? Under what scenario? So for 2026, all I'll be doing then, I'll just be taking this. I have it at that point in 2026. So that in this case, you'll find that after doing that, it will automatically give me the results here. See? Only that this case, we are told to ignore, but in this case, you're told like, in this case, as per the note 2, the growth in equity is only attributable to changes in retained profits. In applying the growth rates, ignore changes in opening and closing balance. That is only in applying the growth rates. So therefore, we can simply say from our computation, my retained profit carried forward will be our opening in this previous, or rather in the next period. So that I should be having that. Whereas for this period, that is has taken, which we needed to have locked this. So this one we didn't lock. I think that's why we are getting that. So we should lock that. So that once I copy paste this one here, it will give us times that. Okay. So this one also, our closing in year 2025 retained profit will be our opening in 2026. Yeah, so that it will just flow like that. So that after once we have this, what I'm going to do next, making sure that we've locked everything, we just copy paste again. We come copy paste at this point. See? So the beauty with locking is that if at all you click here, you'll find that it will affect the changes. You see, from 2026 growth rate, whereas our percentage remain constant. So with the few steps, you have literally everything that you needed to prepare for the first case scenario, which was worst case scenario. Then after that case, the same data we'll be using in all through. So in this case, to make my work much easier, I'll just freeze my pane so that at least it will make our work easier while we are scrolling. So we are done with the 20. We are done with the worst case scenario. So I'll pick this, have it on this case, the same values. I'll be having it at this point. But this time round, I want us to talk about what? The base case scenario. This is a base case scenario. Yeah, I want us to talk about the base case scenario. So our base case scenario, this is a base case scenario. So this time round, you're here about base case scenario. So we have it at that point, our base case scenario. This is what you're having. So remember, because all these are equally the same except for the percentage, so these are what will be required to do for the base case. We have this into our percentage, so we highlight, come and have percentage. Okay, after having percentage, of course, we need to have them into percentage. I just delete 0, 0. This is 3%. This is, of course, 5%. This is, of course, 5%, 10%, 10%, 10%, and 10%. This is what you're having. Remember, they were in percentages. Yeah. So on this case, then you'll find that while I'd locked, it had picked, of course, the base case. If at all you can check, it is taking us back to this. Yeah. So what we need to do is to change the percentage to reflect what? To reflect the base case scenario. So to reflect the base case scenario, this will just be simple. These are what will be required to do. It will be as simple as I delete that one. I pick with the base percentages. So after that, all I'll do first of all is to effect all this. Yeah, is to effect all that. Is to effect all that. That is the first case, or how you can work it out fast. Yeah. So in this case, what I'll be doing, I'll just be taking that. I'll just be taking our total here. I'll just be taking our total at this point, so that it will save us time, right? It will save us time. So we have our total here. We have our total at this point. So this is what we should be having on that case. Yeah. These are what we should be having at that point. So once I have this, remember, we need to, of course, lock the percentages so that it will reflect in all the other years. It should reflect in all the other years. Yeah. So doing that, the next thing that I will be required to do then is to lock our percentages. So we lock our percentage F4. I lock this F4. Just see the magic, how our work will be very fast. We lock F4. We lock, clicking F4. We lock, clicking F4. F4. Yeah, but the concept of BDA is always very interesting if at all you approach it with a very open mind. It's not always about knowing Excel, but also concept is very key. Yeah. So we lock. So on this case, of course, I'll be having our profit here. Let me pick it to be that point. Then that one, of course, should be that plus our retained profit for the period, our retained profit for the period. In this case, of course, I should be having the value that I'll be having at that point. Where in this case, summation will be how much? Summation will be that value. So I should be having our retained profit to be that is total equity. Then our total asset, I also lock this part. See, I lock that point. So once I have locked all these details, the next for 2026 and 2027, what you are going to do will just copy paste. Yeah, we'll just copy paste, confirm the summation if at all there. Okay, total income is simply the summation of the two. Summation of the two. Summation of that. Summation of that. Summation of that. Summation of K. Summation of K. Okay. So the next task that we're going to do, I'll just copy paste this one here. And at the same time, I'll just copy paste it at that point so that my value here in 2026, of course, will be brought forward. Because remember, carried forward, in this case, we should have determined the summation. So just Z a bit. So for retained profit, this is a summation. So you need to take, of course, summation of that point so that it will be okay. Yeah. Then the next thing that you're going to do, you're saying, you just copy paste this in 2026. See, it will just pick automatically. Then at the same time, now in 2026, I copy paste the data for 2026. I copy paste it in 2027. So that, as at the end of the day, these are the results that, of course, we should be having. See, these are the results that we should be having for the base case scenario. So we've done worst, we've done base case scenario. The same procedure will also apply when you're looking at for the best case scenario. Can you do that, or Mwalimu should do that? Yeah, Mwalimu should do that, right? So we've done for worst, we've done for base. Now let us do for the best case scenario. So the same procedure, we copy paste this one here. This time round, we are looking at, of course, we want to look at the best case scenario. We want to look at the best case scenario. So we want to look at the best case scenario. So we take all. I come and copy paste it at that point. So this time round, we are looking at the best case scenario. Yeah, we want to look at the best case scenario. So the best case scenario percentages, the best case scenario percentage, this is what you're given. Yeah, this is what you're given. So very confidently, I'll come and check for the best case scenario. Given the fact that we've done for all this, that is a worst base, now we are looking at the best case scenario. Yeah, best case scenario. So I just have our percentages. These should be 10%. This should be 10%. This should be 4%, 5%, 10%, 10%, 10%. Okay. The same procedure will repeat itself, where the first thing that I need to do is to make sure that, remember, I'd locked, so the moment you are locked, it is still picking what? The previous percentage. And I want it to pick our current percentage. So all I'll be doing is to simply remove this lock on the base case. I put whatever that you're having on for the percentage of the base case. Once I've done like that, I'll just drag it down all through. Because this one had not changed, so this is a summation. I'll be having it at that point. This is a summation. I'll be having it at that point. We just copy paste our formula. This is to save our time. We copy paste our formula. I'll be having it at that point, making sure that it's right. We copy paste our summation. We copy paste our summation. So earnings before tax. Did you change the other one? Let us confirm if these taxes, you have changed them, so that we should be very sure. You see the taxes here? The taxes here for the same case. Good thing we've identified that. That was by 30, by 30, by 30%. Yeah. So also on this case, we should have it by 30%. So this is a 30%, 0.3. So dragging it all through, 0.3, 0.3. Yeah. The good thing is that once you have a formula right, you just be changing everything automatically. So the same case here, that should be, of course, 0.3. So that whatever that you're having here, that should be summation of that. This should be summation of that. Copy paste. This should be this plus retained profit. Retained profit for the year, we have 157. Then, of course, this one should be, we take times that percentage. Then we also lock. So once we have copied our formula right all through, meaning that they are now reflecting what? They are now reflecting our percentages. So the next thing that will be required to do here is to make sure that we have locked now our percentages. So by locking our percentage, you highlight the formula for percentage F4, highlight the formula for percentage F4, we highlight the formula for percentage F4. This is that is summation. So highlight the percentage of that. Click F4 to lock. To lock. That is percentage. We lock. This is that is percentage. So this one is effect. We lock. That one is tax. This one is percentage. We lock. That should be. This is percentage. This was addition, not percentage, but addition, right? That was addition. This is a percentage. We lock. This will be, of course, our brought forward will be carried forward for the month of for that period. In this case, for the first case, of course, we can leave it at that point to start effecting it from the period. So that one, okay. So that when we come to 2026, our closing will be that, and here will be that, correct? So once we have this data, because we've locked and the 2026 and 2027 was reflecting the other one, all I'll need to do is to simply come and copy paste this one here. See? So that I know very well this brought forward will be our carried forward on that here. Then I simply come and copy paste this one here. See? So that's the beauty part of locking. You won't be required to repeat all these procedures all through. You won't be required to repeat all these procedures all through. So that's the first case. We have done what you're required to do on the first point. So I can simply unfreeze this. See, so we've done for the worst case, we've done for the best case, we've done for the best and base case scenario. See? So that's the first thing that, of course, a good examiner wanted us to do. Part 2 of the question, what were we asked? Part 2 of the question, we were asked to compute the following metrics for evaluating our performance under each scenario. So we are told to compute these cases: net profit margin, return on assets, return on equity. Remember, these are ratios, and I believe Mwalimu had guided us in relation to the ratios. So this will be much easier because we have all our data. So the question would be, do you remember how to compute our net profit margin? Can you recall how to go about our net profit margin on our ratios? I know you can, because for that case, you should recall that net profit, ideally, margin will always be in relation to sales, or in relation to what? In relation to revenue. So my net profit margin in this context will be talking of our net profit, okay? We divide by our revenue, or simply sales. All this times 100, because we should be having them in percentage. All this times 100. That will give us what? Our net profit margin. This will give our net profit margin. So it will be important for us to identify our net profits. And our net profit, this is a profit after tax. So in this case, this will be our net profit. Our revenue, we had our revenue at this point here. We had our revenue at this point for all the scenarios. We had our revenue at that point for all our scenarios. So therefore, that is to say, to determine our net profit margin, we are going to take, of course, net profit. We divide this one by our revenue. We'll multiply by, of course, 100 to give us in percentage. So therefore, in this case, we can determine all through. So I'll just drag all through and have them in percentages. Yeah. My only interest, it is in relation to our best case, worst case, given the years, and of course, our scenario. So this is what I should be having. So in that case, if I told you to take it, we'll just repeat this. I'll just be picking this for the year. Worst case, best case. Allow me to just copy paste this point so that we should all be on the same page. Yeah, should all be on the same page. That should be Z. I need to copy from that point. See, so these are what you should be having. Of course, this is for the worst case scenario. This is for the best case scenario. This is for the best case scenario. Under each scenario that we are determining. Under each scenario that we are determining for the given years. So you're done for that part. Return on assets. The same concept on return of assets. We have our total assets. So return on assets, remember, again, it is purely based on the profit. So just be taking, of course, our profit, net profit, we divide by our total assets. So I'll be having our net profit divided by our total assets now. Total assets. Mwalimu had guided us on the ratios. Mwalimu had guided us on the ratios. Remember the class for ratios analysis. So once we have this, our task here will be easy. Already we have our profit to divide by our total assets. Then after that, all I need to do is to drag it all through and have it in percentage. Yeah. So I'm only interested with these parts. So this one we eliminate. I need to eliminate this point so that I remain with the best and worst case scenario. They are the same because maybe you'll find that the total assets and the total revenue are the same as well. So that's the reason why you are getting it at that point. Yeah. So once we have this, of course, in this case, you can, if at all you need it into more than 2 decimal places for your accuracy, you can as well do that. Yeah. To get maybe to increase your accuracy. See? Into different percentages, 2 decimal places to be more accurate. Return on equity. What about return on equity, my good students? The same case will apply where we'll be talking of our net profit. But this time round, net profit to divide by our what? Our total equity. Net profit divided by our total equity. Our total equity. Total equity. So I should be having this case. We take, of course, my net profit, which in this case, my net profit, we divide by our equity component. Yeah. So we have our net profit divide by our equity divide by our equity component. So in that case, I drag it all through, have it into percentage. All I'll be required to do, of course, is to take that. I don't need this. I don't need this. So these are what you should be having. See? this is what we should be having. Again, if at all you want to increase your chances of accuracy more than 2 decimal places. Yeah. So we are done with the part where the good examiner wanted us to prepare to compute net profit margin, return on assets, as well as return on equity. The other part, a good examiner wants us to present a summarized dashboard with a suitable graphs to highlight the revenues and net profit under each scenario. Okay. Revenue and net profit under each scenario. So how will we go about it? That will be, of course, easy. So all I'll be required to do here is to take our period, that is our scenarios and period. So we have revenue and what? We're told revenue and net profit. So in that case, I'll come to our net profit. Again, we take our net profit all through. So I'll just copy that one, and we have it here. Yeah. So I'm interested with the estimates. This is for worst. Estimates for base. Estimates for best case scenario. See, I am interested with these cases, so that once we have that, we can transpose them, right? So that this one we have our 2025 period. We have this is our revenue. We transpose our revenue, and this is our profit after tax. We transpose them at that point. Yeah. So getting rid of this. This is our revenue, and this is our profit after tax, or simply our net profit. So we can just have it as a net profit. Okay. So this is a worst case scenario. I just have it at that point. Then maybe I can merge center so that I have my data there. The same case you can do with the base case scenario. So I'm having our period. So what I'm going to do, I'll just take this. We have it at this point, transpose. I take this, we transpose. I get rid of this. I take my period here. We have it at that point. Then my data here, copy paste. I'm having my set for this is of course base case. So this is a base case scenario. Get rid of that. I can squeeze this point to be on that. Is all about dashboard is all about presentation. Dashboard is all about presentation. Dashboard is all about presentation. Okay, because they are merged, so I can unmerge first. Then I bring it at this point. Then I merge center. The same procedure we applied on the best case. So we have it at that point. We have it at this point. The period given. So I'll just remove that, of course, and have this here. So what you can do, we unmerge so that I can be able to bring it to that point. So now what we are having here, this is a base or best case scenario. I can squeeze it to that point. This is now the best case. Yeah, this is the best case. So once you have our data set like that, whatever that you're supposed to do is to simply prepare, of course, you can simply prepare our graphical representation. We can prepare our graphs given the set data, the one that you're having. To start with the worst case, we just highlight, we come insert, recommended. Recommended, which one can we take? Let me go to all and see what you can have. I usually love to use 3D. Yeah. So on this case, I can pick this one here. This seems to be very okay. Where my chart title, this is a worst case scenario. I think this looks neat. So it depends, of course, with your creativity. Presentation is always about your creativity. Presentation is always about your creativity. So for the worst case, you can go with that. For the base case, I can come and insert recommended chart. All charts we can combo, for example, because it will cater for both. That is cluster. Which in that case, they can use it at this point. Select the one that you think it will fit, or the one that you just think is going to be interesting in your eyes. I can decide to use, say, like I can fill it with yellow. So maybe color fill, can do yellow. Yeah. For chart here, maybe this is a case, we click on the chart, you do equal sign at this point, then you come and select that is a base case scenario. Yeah. Maybe I don't need all these. I can just remove them. Then I add data labels to represent each. Yeah. Then lastly, of course, we can talk about the best case scenario. Same procedure applies. We come and take this, insert, recommended, based on what you can use. So in this case, can use donut size. Yeah, we can use the donut. I can simply reduce the donut hole. That be appropriate? No. That would fit in this case. Maybe let me pick. Remember, this one is purely on you. You select the one that you think it will make your eyes rather kind of it is presentable in your eyes. Yeah, you can go with the normal. You can go with that. Maybe for presentation, that can work. Then my chart title equals sign. This is the best case scenario. See, so these are what you are required to do. Remember, for charts, it will purely depend with how you want to present your data. So in our case, these are what you're supposed to do. These are what you're supposed to do. So this was the first question. And remember, the beauty part of this question, it has cut across the ratio analysis. So it will be very important that we take time and go through the concept of ratio analysis. It will really help us a lot. Also, the same question, you'll find that it has also helped us to understand the concepts of financial reporting, that is a presentation. That one will also be very important for us. So after this point, the next question that you're going to handle will be question number 2. This is more to do with financial management. So that one, guys, see you in our next class. Bye-bye.